Street, top investors watching your money this week. Joining me right now is Macro Trends Advisors founding partner Mitch Rochelle, the Fitz-Gerald Group principal Keith Fitz-Gerald, and Mahoney Asset Management CEO Ken Mahoney. First up, Mitch, let's talk markets and what you're expecting. This morning we see a pretty good firmer tone, up 76 on the Dow, up 70 points on the NASDAQ. But of course, yesterday you had the NASDAQ down sharply. Growth and technology stocks sold off, and the NASDAQ was down nearly 2% when Treasury Secretary Janet Yellen said she expects interest rates to move higher in order to keep the economy from overheating. And of course, we know that as markets are still near record highs, we could see a dampening of that as taxes come on board and become more of the conversation, with the administration planning to raise capital gains taxes all the way up to 43.4%, Mitch.
I'm glad you said taxes, Maria, because you know I love to talk about it. But besides that, the fact of the matter is the tax on the economy right now is inflation. The runaway spending of the government, $6 trillion, if we did all of this stuff, is driving consumer prices through the roof. And when consumer prices go up, the middle class pays more at the pump. They pay more for diapers. They pay more for lumber, which is really a tax on the economy. And I think every time you hear news of inflation, the market's going to react this way. It's inevitable. It's part of our lives, and it is inevitable that it's going to disrupt markets throughout the year.
Are you expecting a sell-off once we actually do see taxes go higher?
I think a couple of things, Maria. One is if they did a corporate tax, that's going to drive consumer prices higher because there's no way companies are just going to eat that tax increase, which could lead to a sell-off. And I do think that, days like yesterday, when they're selling, I think the profit takers are going to try to find ways to take profits. So I do think throughout the year, whenever we hit new highs and then we retreat a little bit, I think some of that selling is fueled by people worried about capital gains taxes and taking money off the table, 100%.
Yeah, well, Keith, they were taking profits yesterday. I know you're still hot on big tech, Keith, despite the sell-off. The NASDAQ down for 3 days in a row because people are worried that these companies' stocks have gotten ahead of themselves. Where are you seeing growth right now?
Well, I got to tell you, I think that's the biggest mistake of their investing lifetimes. This is a trend that's backed by trillions of dollars, and it's a matter of scale. People argue with me all the time that these companies can't grow at 40, 50, 60%. Well, they've done it, and they're doing it again. And to put it into context, Maria, I mean, these names, we talk about them all the time, but it's very hard to understand. Apple, let me look at my notes, makes $691,000 every 60 seconds. Microsoft, $322,000 every 60 seconds. If you go to Krispy Kreme, that's 1 million donuts every minute on your plate. You can't find that kind of scale growing that fast anywhere else in the market today.
That's amazing. And does that growth story get crimped if China becomes a problem? I mean, look, you've got a lot of negative stories around China. Apple is counting on China for growth, isn't it?
Well, I think it's a fair question, but the bigger pivot for Apple is going to be medical. Tim Cook made it very clear. He wants Apple to be remembered legacy-wise for its medical contributions. They already control a huge portion of the medical information market, and with things like the Apple Watch that I'm wearing, things like the iPhone, the iPad, these things are all linked to the Apple ecosystem. So I think the opportunity is far bigger than most investors realize or understand.
Yeah, Google too, by the way. It's a very important investment story as well. Ken, let's talk energy. Crude futures hitting the highest level since mid-March, rising nearly 2%. The U.S. and European vaccination efforts offsetting demand losses in India, which is really a tough story. I know you're hot on the Spider Energy ETF as a buy. What's going on? What's the story behind this move that has crude at 66 and change right now?
Yeah, so definitely a little supply and demand. Obviously, a lot more demand coming out. We had to hit the pause button in our lives, especially here domestically. And then you start seeing that travel pick up. You've seen those numbers in the AAA numbers and so forth. But I also think what's behind, let's say, oil investment is they pay a good dividend. And this can mean arbitrage. We're all talking about this higher capital gains rate. Well, guess what? Let's say your income tax bracket will be, let's say, 20%, and your capital gains rate is going to be 35% for capital gains. Guess what investors are going to do? They're going to go more for income, right? So some of the best income payers we have is energy. So yes, XLE I think is the best way to play energy. It's a 4.2% dividend. Very, mobile and Chevron-centric. About 40% of portfolios in those two companies. But again, a good way to play the rebound of the economy as well as capture some dividends, because more and more investors are going to look for dividend-paying stocks and away from capital appreciation. That's what happens when you raise taxes. That money starts flowing around. And I think the second best way to play this kind of reopening trade and demand and so forth is through materials. XLB is a symbol, another spider. They only pay about 1.5% dividend, but these are companies that make things, and they'll be able to price, have more pricing leverage because of the demand that's coming in. You'll find Dow Chemical, you'll find DuPont and those kind of companies in XLB. So I think that's the two best ways to play this kind of reopening trade and imbalance of supply and demand, because we have more demand, and you're already seeing all these chain supply disruptions that are happening all at once.
Well, Ken, a couple of things there. I mean, on the dividend story, they're raising dividend taxes as well. I mean, I believe that
but there's still
the dividend
an arbitrage. I'm sorry.
Okay. Because if you own a company that pays a dividend and you sell that stock and get that dividend, you're paying a double on that too. They're going to raise the dividend tax a double as well. Yeah. And on things and the companies that make things, what's your take on the Dow theory? I know a lot of technicians look at this when the Dow Industrials are rising and the Dow Transportations are rising. These are the companies that make things, and these are the companies that transport those things. That's supposed to be a very bullish sign, according to technicians. Transports have been on fire.
Yeah, transport's a new high yesterday, and here's the Nasdaq struggling, but it's showing that the economy is really rebounding. They have the transports and the Dow Jones Industrial Average, which, by the way, snuck through a little win yesterday. Dow Jones, looking at that was like a photo finish there. But to your point, the Dow theory kind of says, hey, the economy is going to get stronger. It's looking 6 months down the road. It's a leading economic indicator in both those factors. The Dow Jones at record highs and near record highs, and now we also have transports at record highs. It's telling us that the economy is really going to take off.
Yeah, and we're expecting a very strong GDP number for the second quarter as well. All right, great conversation. Mitch Rochelle, Keith Fitz-Gerald, Ken Mahoney. Always a pleasure, gentlemen. Thank you, and we will see you soon. Have a good day. Much more ahead coming up this morning. We've got